just what comes next for Bitcoin in this crazy macro environment where we see so many fears around the spiking commodity prices, what the Fed is going to do, what's happening with the war situation. Are we going to see the end of the petrodollar as we see countries moving away from the dollar and towards the Chinese yuan? Lots to talk about in today's video, so make sure to watch the whole way through to get all of the goods. My name's Lark. Every day I make videos talking about cryptocurrency investing. If you do like that topic, you like staying up to date with what's happening in the cryptocurrency markets, then a quick tap on the thumbs up button. Let me and YouTube know. That would be super freaking awesome. By the way, every single week my team and I produce Wealth Mastery. It's a cryptocurrency investor report. Absolutely jam-packed, full of value. We have an altcoin review, research report, DeFi tutorial, interview with an industry-leading project, token sales, airdrops, my portfolio updates, NFTs, and much, much more. You can sign up for free or go premium for less than $10 a week by using the link down below in the description. Let's go ahead and get into some markets. So, Bitcoin been doing some stuff here today. As you can see, a nice big green candle has just popped up out of nowhere in the very recent time. Now, what's interesting, of course, is that for all the price action that we have seen over the last couple of months, we've basically just been flopping on either side of approximately $39,000, which is a very, very important area for Bitcoin. As you can see, this chart here, shared by Lex Moskovsky. So he has pointed out that $39,000 is the largest area of on-chain volume for Bitcoin in the entire history of Bitcoin. We had 775,000 Bitcoin changing hands at around $38,700. It's an incredible amount of Bitcoin that has been changing hands in that particular area. The last biggest one, just for your reference, was all the way back here at $2,300 and $3,800. Those are the last two biggest areas for Bitcoin changing hands. After that, the next biggest one, $37,960. So you can see the current price level where we are at right now. Well, we're just a little past that at the moment, but right in this area has been so incredibly important. You can see, of course, that's where the 21-day exponential moving average is currently hanging out at. Now, I just want to be clear on my thoughts here with Bitcoin. It's been pretty boring recently. Price action wise, we just get these moves up, moves down, and yeah, they're moving by a few $1,000s in either direction, but realistically, we haven't established a definitive trend yet. And when I say Bitcoin's boring, that's exactly what I mean. We haven't really established a definitive trend. Are we going to start trending lower? Are we going to reverse and start trending higher? We're just consolidating right now. That's exactly what is happening for Bitcoin. We're just winding up in here within this, of course, big symmetrical triangle here, which I don't think we'll get to the end of that. I think we will see some exciting price action one way or the other well before that. However, what I'm particularly watching for right now to really give us a direction on the market and for Bitcoin to stop being boring, to get out of our consolidation phase, would be for Bitcoin to break either under $34,000 or under $33,000. Now, breaking under $34,000, that would mean that our higher lows would be invalidated, because right now we've got a higher low right here. So even if we came back down here, for example, let's say to $35,000 or $36,000, it's just another higher low, all good. If we lose that, well, we lose our higher low. If we lose this, well, that was hopefully going to be the bottom. Means we're looking for a new bottom at that point. Also, to consider here is the upside potential. So that's the downside potential, and where things start to get interesting if we lose certain levels. The upside potential, we really need to get past the resistance, preferably all of resistance land here, because this whole area has been pretty important. But particularly, we want to see Bitcoin getting past approximately $46,000. It'd be really nice to get a daily candle closed above that level right here. So a very important area right now for Bitcoin to get back above. But if we can conquer resistance land, if we can conquer the 200-day still moving average, well, then we obviously flip very bullish and, get out of our consolidation phase. But right now, we are just still in our area of consolidation, which is kind of a boring time and a nice time to stack sats, to be honest, which is exactly what I have been doing. So not a whole lot happening over in terms of price action for Bitcoin right now. We're getting some pumps up, we're getting some dumps down, a few $1,000s in either direction, but basically we've just been around $39,000 for the last couple of months with a little bit of price action on either side. Now the big news, of course, is the Federal Reserve meeting. So started today, finishing tomorrow, and of course they're saving the best for last, not announcing the rate hike news until tomorrow. Come on, Jerome, man, you're keeping us all in suspense. What are you doing, buddy? Jerome, this guy's got a flair for the theatrical, I suppose. Just tell us, man. Anyway, there's been a lot of forecasts, a lot of predictions about what exactly he's going to announce. Most people are expecting a 25 basis point rate hike to be announced tomorrow. So that would increase the interest rate from near zero right now, up by 0.25%. So that's what we're expecting. If we see it coming out at 50 basis points, that could be a bearish signal for the market that actually rate hikes are going to be more aggressive than initially forecast. And of course, then the question becomes, how many rate hikes are we going to see? Well, that's an interesting question. Now, Goldman Sachs is out here forecasting that we're going to be seeing quite a few of them, and that we could even see up, some analysts are saying as many as 7 rate hikes, getting us up to around 2.57% interest rate peak around the second half of 2023. So that's all, very interesting in terms of the macro perspective of what we see happening with the interest rates and how the markets are looking at it. And obviously, we're not going to know for sure. These are all just guesses. These are analysts saying, well, what if? We'll find out tomorrow, of course, what actually is. I'd like to share some interesting tweets with you here. So this is from Dan Tapiero. He's a great macro investor to be following over on Twitter. So he shared this pretty daunting hurdle ahead. S&P 500 down 11.8% the first 48 days of trading in 22, the fourth worst start to a year in history. The other 4 worst starts, 2009, 2020, 1935, 1933, all of which resulted in a recession or some sort of financial crisis. Now, what's interesting is that a stock market, even if there's a recession going on, can still rally. And that's a pretty interesting thing to point out here because this chart shows a lot of interesting data. So we see that lackluster performance in the first 48 days of trading, right? So you can see here, the worst years, up. Look at that. All starting off very badly. Well, look at this. And then the day 49 to year end, so that's until the end of December, in every one of these years that started off terribly and led to some kind of recession or terrible event in the market, every one of those years finished higher. Well, almost every one of those years. This is the last 15 times that we've seen this happening with this red openings at the first 48 days of trading. All but in 2 of those scenarios did we see the markets going higher, and often substantially. We're actually talking, 20, 30, 40, even 60% sometimes gains. So pretty interesting to see those kind of numbers on a historical basis. And obviously, history does not repeat, but it often rhymes. Past performance does not indicate future performance. You guys know all that stuff. But it is very, very interesting to see that kind of data. And of course, we are in uncharted waters with the commodity markets, with the unwinding of Russia's entire economy, what's going to happen to Russian equities and the Western exposure to that, and yada, yada, yada. A lot of stuff going on out here. But as Dan points out, if equities close up this year, which historically there's a good chance they will, then we could see the $100,000 Bitcoin by the end of the year, especially if we get that kind of a rally coming in for the equity markets. I also wanted to share this with you here. So this is from Ryan Detrick. He says, first Fed rate hike is coming tomorrow. Here's how stocks have done during periods of rate hikes. So we've covered this before, of course, but I wanted to bring this up because it also talks about the entire returns during the cycle. So this is the annualized return during a rate hike cycle. We can see most times positive returns. And during that entire rate hike cycle, we tend to have very good returns for the S&P 500. So pretty interesting data, again, that even in these periods of rate hikes, and even if we get a recession coming in, we still can see actually stocks outperforming in the market. Another interesting one here for you from Lance Roberts, chief strategist of RAI Advisors. He says the S&P 500 triggered a death cross of the 50-day moving average, crossing below the 200-day moving average. Before the age of Fed intervention, this was a good signal to GTFO. However, since 2009, it has been a good buy signal as the Fed was forced to bail out markets. So that's pretty interesting. You can see here, 2009, ever since then, we've had these death crosses and it's resulted in market pumps. Once the Fed is getting scared that the markets are going to roll over, they intervene. Now, is that what's going to happen this time? We shall see. We shall see. But if they do, well, they like to intervene and stuff. We do know that. But if they do intervene in a significant way, that could, of course, reverse the trend here for us. And a final thing I wanted to share with you today, because this is pretty big and crazy news when we talk about the power of the dollar, right? And really all of this stuff, we're talking so much about what the Federal Reserve doing. You know, why does that matter? Well, it matters because the U.S. is still the biggest economy and the dollar is the global reserve currency, which is why we have to talk about what the Fed's doing, why what the Fed is doing has reverberating implications around the world for stock markets, for crypto markets, right? For commodity markets, all that stuff. Here is a very interesting thing. We could be starting to see the beginnings of the end of the petrodollar. And it's actually, interestingly, all kicked off, in part at least, by the whole war in Ukraine because of the sanctions being leveled against Russia. Russia's looking for other places for their oil markets. And it's also bringing a lot of interesting things to the table. For example, we have Saudi Arabia here considering to accept Chinese yuan instead of dollars for Chinese oil sales. Obviously, the demand in China for oil absolutely massive. If they start taking yuan instead of dollars, massive. That means one of the world's biggest oil consumers is paying one of the world's biggest oil suppliers in a currency that ain't the dollar. Massive implications. We also see India reportedly exploring that they will also use Chinese yuan in oil trades with Russia. You know, not everybody is on board with the sanctions list. You know, you hear the whole world sanctioning Russia over this, and what Russia has done in Ukraine is obviously a terrible, terrible thing. I just learned today one of my former students actually got killed there. It's terrible, terrible situation. But here you go. Not everybody's on board with the sanctions regime. If you look at a map of who's actually sanctioning Russia, Europe, Canada, America, Japan, I think maybe South Korea, Australia, New Zealand, right? All the Western countries. All of Central America, all of South America, all of Africa, the Middle East, South Asia, Central Asia, Southeast Asia. Nobody cares. Nobody cares about this. They just want to keep buying oil and gas and whatever else. They're not kind of getting involved in this whole situation, but they are frustrated by the sanctions, by it being more difficult to do business with Russia because they still want to buy the oil. Again, interesting implications long-term for the petrodollar. Perhaps it is time for the rise of the Petro Bitcoin. Da-da-da-da. But that's a conversation for another day. Anyway, thank you so much for watching today's video, and peace out till next time.